All right. Hello, everyone, and thanks for joining us for our webinar today, Bitcoin 2021 and Beyond. I'm Lou Kerner, CEO of Big Token, and Big Token is an app that lets people own and monetize their data. And we believe that data privacy is a human right, and we also believe that crypto is the biggest thing to happen in the history of humanity. And we hold these calls so that we can help build the crypto community and educate the crypto community. And the genesis for today's call is simply that we've had a rapid rise in the price of Bitcoin this year, up by more than 100%. And we've seen a lot more people come into the industry and invest in the industry, both individuals and institutional investors. And kind of everybody has a question, of how high can this go? What are the risks? There's so much to talk about, and excited that we've got three experts with us today, including Jay Gould, who's a longtime friend of mine and technology investor, and he's all in on crypto these days. So welcome, Jay.
Thanks, Lou. What's going on?
And we've got two other experts with us today, including Mike McGlone. There we go. Mike McGlone, the Senior Commodity Strategist with Bloomberg Intelligence. So welcome, Mike.
Lou, hello, and thanks for having me. I'm looking forward to our discussion.
Terrific. And we've also got Cory Klippsten, CEO of Swan Bitcoin, and I'm actually a very happy customer of Swan. So welcome, Cory.
It's good to see you, Lou. Hi, Jay. Hi, Mike. Looking forward to this.
So, there's a lot to discuss here, and Jay and I have lots of questions, but we're going to start with just some opening comments from each of you. And Mike, you want to start us off?
Sure. Maybe I can start with sharing a screen. I always like to show pictures when I talk, and I think I'll just go quick. You should be able to
That'll
see.
Be great.
Yeah.
I've got to make you the.
Yeah, you have to enable me on that one. So to me, the key thing about Bitcoin is I like what Cory's description says for Swan. To me, that's the way I look at Bitcoin. It's the kind of thing you're supposed to just accumulate. Don't trade it. Good luck if you trade it. I used to have hair. I started in the trading pits when it used to be cool to be in it, when there were trading pits. And, to me, the best way to look at Bitcoin is this shot. What is Bitcoin? This is one of my favorite things when I get a chance to go to London is looking at going to the British Museum and seeing the hoards. And this is a Hoxne hoard. So just picture this: you're a Roman leader or whatever, and you're in England, and the empire's collapsing, and you're trying to hide your wealth. So just picture, we're all males, and you know that if you're a wealthy person and you need to hide some wealth, you're not going to have a servant do it, because the servant's going to find it and get it. You can have a box of precious metals, you hide it in the backyard, and you dig a hole and you hope to come back to get it. Well, you never got it. So to me, that's when people ask me, what's this silly internet stuff? This was what Bitcoin has solved historically and globally. So when people say it takes a lot of electricity, I'm like, that's part of the strength. So I want to use that as my foundation for where we're going today. And just to bang this, it solves this problem of being able to hold, transmit, transact, transport, and 24/7 have liquidity and a store of value that's actually increasing in value digitally. So to me, that's the foundation, and I'll keep it short and sweet. And this question, and I'll narrow it down to what we're doing this year. I see us tipping into an orderly adjustment to a higher plateau, and you can see that volatility is declining. 30-day volatility in Bitcoin's down to the lowest since October when it broke out. And I see Bitcoin.
Hey, Mike, yeah, okay, there we go. I'm sorry, we weren't seeing your screen change.
Yeah, I'm not, and there's nothing to change. I'm going to just make this quick and then go right to Cory, and that's what I want to end on. To me, this is just a part of the bigger picture. It's the year after a halving. So basically, I see a perfect storm for higher prices. The year after a halving, last year, something never happened before. Bitcoin volatility dropped below that of the stock, the lowest ever versus stock market, versus gold, and versus crude oil. And now we have these milestones kicking in. The Tesla allocating to Bitcoin was a key factor. We see the macroeconomic situation is pretty substantial. QE, everybody gets all that. And Coinbase is just another milestone. And I'll end on this. The key next dangling carrot that I see keeping Bitcoin bid and going higher for this year is of an ETF. It's just a matter of time. I mean, every ETF provider in this country is looking north to Canada and saying to regulators, "Hey guys, you're making us look bad. I know you missed Madoff, but it's time we catch up." So ETFs are coming. So until their ETFs are launched and widely disseminated in this country, the price is probably going to go higher. And I see it more like in the head above 100 grand. And I see what's happening this year is these levels we're adjusting to, we might never see them again. So I don't know we need a good risk off correction to get Bitcoin below 50. I think it holds 60 and 70 is kind of the next initial resistance. With that, I pass it back to you, Lou.
Okay, thanks, Mike. I think one of the super interesting things, obviously, that you bring up as a commentator on Bitcoin is you're also, that's not the only commodity, I guess, that you follow. I don't know if you consider it a commodity, but you also follow gold and other commodities closely. So, is that the context that you use? Can you help the audience understand kind of how you put Bitcoin into the context of the other things that you follow?
So that's how I came into it here. I'm a commodity strategist, macro commodity strategist, and no one was covering it. I came to Bloomberg in 2016, and I knew about Bitcoin when I was running commodities at S&P, and I always viewed it as, it's silly internet money. It's moving in the space of gold. But 2017 was when it started breaking above the per ounce price of gold, and that's when I really started to believe. What I do here, though, is what I really enjoy being at Bloomberg is I'm neutral. I've been buy side, sell side. My primary purpose is getting it right for terminal users, and everything's trickled down. It trickles down to media, trickles down to TV, and particularly for events like this, which to me is like show and tell. I just love to be able to talk and learn from colleagues and people like you. So, for instance, tomorrow you're going to see my corn outlook, and you probably don't give a damn about corn, but I'm bearish in corn because I expect more supply, and I want to rope that in because what's going to happen in corn is rapidly advancing and innovation and technology is going to bring on more supply. Prices have gone up, and every farmer in this country just cannot wait to plant fence posts to fence posts. That's the big difference with Bitcoin is supply is trickling down. Supply is going away. It's one of the most unique things I've ever seen in commodities. It's expected, it's predicted, it's scheduled. And I don't think there's going to be a break in the code, but if there's a mess up with the mining, it only can be reduced. 900 coins a day is a way to look at it until 2024, and then it drops to 450. So as a strategist, to me, all that matters is demand. And that's when I really started getting bullish on it. This was April 2019. We couldn't get into specifics when I saw nothing but rising demand. I see now a rising tide of institutions getting into space and the supply going down. So what are the key risks? Substitution. Well, it's already won the adoption race, and there's 9,000 substitutes, and good luck with that one. But once you win that substitution race, which Michael Slayer points out, you won the adoption race. So I look at it as it's got everything going for it for a perfect storm for higher prices. And I ask myself every day, what's going to trip this up? But then simplistically, I look at crude oil. One way to make crude oil go lower is prices going up, more supply, less demand, prices go down. Pass it back to you.
Before I'll have one more question, Jay, obviously you're welcome to ask this before we pass it over to Cory for the opening remarks. We'll have more questions, but obviously your job working with Bloomberg is to talk with institutional investors. And so, can you talk a little bit about how the arc of those discussions have gone during the years you've been talking to them about Bitcoin?
Yeah, so I don't have any inside scoop, but I get the question. So here was a key thing that was really kind of tipped my scales was in December. The largest bank in the world, economics department, asked me to explain Bitcoin to them. And their quote was, "Because our clients are asking." I'm like, okay, well, I can see what's happening there. I've had a few years ago, I heard about some brokerage firms are bringing it on board. So to me, it's you see the tie, that's for TV and just being on board. That's just extemporaneous. Whenever hey, Mike, they want me to comment about commodities or Bitcoin, I got to be there for that. But hey, it's fun. I get paid for it. It makes part of the job fun. But to me, that's the key thing. It's institutional. And that's where, to me, that's really part of the paradigm shift this year. I think every institution on the planet that manages money, that holds gold, that is responsible for running money, knows if they don't allocate at least a small portion of their maybe 100 units of investments, 1 or 2 units of those 100 units to this thing called Bitcoin, they're at greater risk of looking like the fools 10 years from now. And that's what's really shifted. You lose 1 or 2% of your total assets, who cares? But if Bitcoin just keeps doing what it has been doing, which we all know is accelerating, you got to be in the space. And then you're supposed to be smarter than everybody else, right? You're supposed to be smarter than the average person. You're supposed to know the next big thing. And to me, that's the key thing, is they all know that I don't want to look stupid. I don't want to lose my job. I got to have some Bitcoin.
Mike, question for you. So Bitcoin historically, the last 10 years has been compounding at 200% a year, as we know. And it seems like it's the best performing asset class that we've ever seen. It's incredible. As you said, the risk. So with that kind of growth ahead, with the expectation of that kind of growth ahead, why not be all in on Bitcoin? Why are we messing around with corn? Like, why are we messing around with anything else at this point? Right. Like, so tell me the risk. You touched very lightly on the risks. What is the one thing that you're thinking of that you say, I can't go all in on this? I can't advise people that they should be all in on this. Like, what, I know, like, typically traditional investors, especially institutional investors, are diversified. But in the Bitcoin world, they call it worsification, not diversification. So, like, why would you want to be worsified?
Well, I like the way you describe it, Jay, but from my standpoint as a strategist, I don't give investment advice, but I can easily say, I think the market's going here. I think it's going there, and it's your decision to what to do with it. So that's part of the compliance thing and the whole corporate thing. And so I just say, hey, this is where I think Bitcoin is going. And then I'm anticipating. I have to try to figure out why it's going there. To me, this is the most important thing to always remember about markets. I learned this in the trading pits, was in the 80s. When it just was a great thing, is human nature. And it's one of the things I think I have a good sense of, is the human nature of investors. And to me, that's what's really kicking in, is what I described earlier. It's one of the most unique examples of human nature ever, where people know they can't go all in it because what if the risk of getting fired, the risk of
you don't know what you don't know, right?
Well, if personal, why not? If you're personal, you don't have a lot of money, and you're going to have income, who cares? If you lose everything in Bitcoin, that's not good. But as long as you got a job, it's not going to make a big difference. But you're running, say, if you're a pension fund or endowment, you got to answer to a board of directors, and there's a lot of people you got to answer to. And getting over that hump of getting into this Bitcoin thing is now finally, you got to go through tons of meetings, or finally getting past that. And that's where I see is, by default, virtually every one of these prudent investor types on the planet all know that if their greater risk is not allocating to Bitcoin. Before, it was like you heard from people like Jamie Dimon, I was going to fire anybody who's involved in it. And that's what's happening. It's just that massive shift. And I see it as early days, because Bitcoin at $1 trillion versus a world of $200 trillion of investable assets is still teeny.
Yeah, you had the great chart I saw you put out about how it looks like the Grayscale Bitcoin Trust is on its way to surpassing the biggest gold ETF, the Spider ETF, which gold GLD, which would be super interesting. So thanks for those comments, Mike.
I think you just gave me a good idea. We got to do a back page ad on IBD for all the folks on the train, and it's just going to say, cover your ass, buy Bitcoin.
Well, that's
and everybody
funny,
can be like this.
It's funny, Cory, but it's profound. It makes sense. The sense I'm getting now is the people, like, I just had a good call with my good friend out in the Corn Belt. Now, he's one of the smartest landholders, investors I know, and he says, out here people don't really get it. And I think if you don't own some Bitcoin and some property, and you're just doing the standard wage, you're at risk of coming back to what my ancestors were in Europe, peasants. I mean, that's why we came over to the States, because I was Irish and Lithuanian peasants. You're going back to that world. You have to own some, because it's becoming the digital reserve asset. We all know what we're doing with paper money. And then I look at, here's a simple thing. We in this country can borrow and buy property, if you have decent credit, at the lowest rate in the history of mankind. And here we are. I mean, to be able to say that is quite shocking. You've got to do that. And if you don't, it's almost imprudent not to. And part of that is owning some gold and Bitcoin. I say gold because before they were together. Now I look at those people who held gold in the past, because it's a stable way to just diversify out of the dollar. If you hold gold and you don't have Bitcoin in that same bucket, now you're somewhat naked. So when I think of Swan, I think that's a responsible thing. Just allocate a little bit every day where it doesn't matter. And make sure you're not losing out in this world that's going digital, and Bitcoin is the digital reserve asset.
There you go. I actually, Cory, rather than cover your ass, I like don't be a peasant.
Don't be a peasant, buy Bitcoin. It's pretty good.
Okay, terrific. Thanks for sticking around, Mike. And we're going to have Q&A from the audience. So, at any time, feel free, if you're in the audience, to put a question in the Q&A on Zoom. And if we pick your question, we'll let you know via chat. and we'll let you know when your turn is, and then we will bring you up and make you a panelist so you can ask the questions yourself. And with that, I'll turn it over to Cory. And Cory, it'd be great if you could start with giving some of your background and telling us about Swan before diving into Bitcoin.
Yeah, sure. So very briefly, I was mostly a big company guy for much of my career. Worked for Microsoft, Morgan Stanley, McKinsey, Google. And I was working in startups after Google. Left in 2013. I've been out here on the West Coast, LA, San Francisco, a lot of New York, kind of mixing it up, investing, advising startups. And Bitcoin just blindsided me within a few months of you, I think, Lou. You were like summer of 17. I think I was May of 17 that it caught my attention. I had swung and missed twice. Somebody gave me some Bitcoin in January of 2014 at a digital media conference, and I didn't read the white paper and didn't listen to any podcasts, and I lost the Bitcoin. A friend of mine asked me to help him package up some of his seed investments and advisor shares into like a Series LLC and sell off half of that in like Christmas of 2015. And he had shares in like Ripple and Balaji's 21.co in there. So I like produced slides about these companies for 1% of the proceeds of the sale and still didn't look into Bitcoin. I was busy with ad tech crap like all of us were and totally missed it again. But yeah, I couldn't ignore the price run up and just kind of the energy in the tech space around Bitcoin. And, at that time for me too, crypto in 2017, I spent about a year sorting through all of it. I was, punting altcoins on Binance when Binance launched and, getting all in these ICOs and all this stuff. And, it took a good solid 11 months for me to basically settle on that I wanted to focus on just Bitcoin. And, I spent about the next year trying to figure out what to do in Bitcoin.
Would you call yourself a Bitcoin maximalist?
I mean, it's one of those things. It's actually initially an epithet that was created by Vitalik. And so I call myself a Bitcoin rationalist.
Sorry.
Yeah, exactly. So, but I don't care. I mean, we own it, right? Bitcoin, a lot of Bitcoiners just own it and decide to say like, we're a maximalist. We'll just take that and it's fun. And we have hats and stuff like that. But it is important that, when folks from Brooklyn and Ethereum crowd say like Bitcoin maxi, they're usually trying to use it as a pejorative. But yeah, I mean, what I hit on my own, it's not even a unique insight. It's very clear that with Bitcoin being, basically the best product that's ever existed, because you can literally exchange bad money for good money. You don't really need to dress it up and market it with anything extra. All you need to do is help people understand it. And so the core of anything that I wanted to do in the Bitcoin space was all going to be around education. And, initially the product that I wanted to tie to education was giving somebody some Bitcoin and bundling that with education. And I didn't think that there was enough space in the market for another player to come in and just sell Bitcoin directly. But we made Bitcoin for sale to the givers and the receivers on that platform. And that took off immediately and just drowned the revenue from the gifting. And so we split it out and that became Swan. So we launched Swan in March of 2020. And, as you guys know, we're known for the automatic recurring purchases. We try to get people to think about, make the decision once, set it and forget it, swan and chill. Think about it like a 401k where it's automatically coming out of your paycheck, or like making that contribution to your mortgage. You're not going to miss that payment. And just have it kind of be the third leg of your savings plan.
And I know to the degree that you talk about it publicly, what's the scale of Swan now?
We've grown very quickly. Some of that is on the backs of the bull market. Some of it is just adding product lines. So we initially launched with just the dollar cost average product, but now we're international and we have Swan Private Client Services for high net worth individuals, kind of like white glove OTC function essentially. And then we started taking entities, I think in December. So now we have hundreds of corporate accounts and people doing trusts and IRAs and all that kind of thing. So it's just, people think, oh, you just sell Bitcoin. That might not seem like it's all that complex, but when you think about all the jurisdictions and all the different ways that people want to buy Bitcoin and what they want to put it into, it ends up being quite the undertaking.
One of the things you talked about was education, and I know that you do a lot of educating on Clubhouse. Can you talk about that experience, as well, and kind of what you think is going on in Clubhouse and anything else you mention about the education part?
Well, Lou, you made me aware of Jay probably 6 or 7 years ago. Like I knew he existed, and I remember you mentioning his company Yashi back in the day. But Jay and I see each other every day on Clubhouse now. But yeah, Clubhouse is just it's this new app. It's drop-in audio basically. It's kind of like an interactive podcasting platform, and it kind of organizes around rooms, and those rooms have titles. And the people who start rooms usually belong to a club. That's where they get the Clubhouse thing. And we started a club in December called Cafe Bitcoin, which has fast become, by far the most active, most listened to club about Bitcoin on the platform. And, we do all kinds of different, we have, I think, 12 different languages doing different rooms. So there's like an Indian Bitcoin room every week, and there's a Portuguese Bitcoin room and German Bitcoin rooms and all these things under Cafe Bitcoin. Plus we have a daily room every single day that starts at 6:30 Eastern and kind of just goes all morning. Usually peaks out somewhere between 500 and 1,000 listeners. We do like a Bitcoin Q&A on Monday nights. A lot of these we actually broadcast live to YouTube as well. And then our new show that we just started last week is the Bitcoin Newshour, where we actually crowdsource the news. And so people actually come with their own headline. They replace their picture, their avatar on Clubhouse with their headline, and they present their headline, and then the panel kind of discusses it. And then we broadcast that live to YouTube. So now it's becoming a podcast as well. So we're sort of crowdsourcing the Bitcoin news every day using Clubhouse. So it's interesting, man. We went from like text and images straight to video, and we kind of skipped audio as a way to interact for a social media network. And it is absolutely spectacular because I don't want to be on video all the time.
Cory, can I ask you a question? I want to jump
Jay.
in if I could. Yeah. So one of the reasons why I think we're seeing the price, at least the support of the price moving up, and I'm hoping as it continues to rise, and it has been rising, is the institutional money that's coming in. Are you happy with that? Do you feel, because you're seeing it come in from the private client side and the corporate side? Are you happy with the growth that you're seeing on that? And have you heard anything from other exchanges or other folks in the space? You can't name names on corporations, but I mean the Ross Stevens and the Michael Saylor video was really exciting. He said he had $21 billion in an order book through this year, and I think I read that for every, am I saying this right, $100 million into Bitcoin, the price of Bitcoin moves up by 1%. I think I read. I think that's right. So what are you seeing, and how are you feeling about that right now for that continue? How do you feel it's going to continue for the rest of the year, I should say?
So you're kind of talking about like the reflexivity of new money coming in, and everybody knew that. I think Fundstrat put out the number at the peak of the bull market in 2017, one incremental dollar into Bitcoin, because almost nobody was selling, was pushing the price up $25. And that right now, somebody did run the numbers a couple weeks ago, and right now it's at about 4. So it's not 25, it's 4. So you need like $1 billion to push the market cap up 4 billion.
It's $1 billion. Okay. Yeah.
Yeah. Something like that. And I think that we'll see that number go up as this thing, if we are still in cycles, which I believe that we are. I think there will be another sort of euphoria blow off top sometime later this year, early next year. And this thing could get kind of out of hand. And that's when you'll see, the incremental dollars really spike.
Is that going to be driven from the institutional money though? That's what I'm getting at.
Yeah. I mean, it's all piled in together. There's so many more individuals. I feel like the tail end of these things often is just retail driven. That's when your cab driver and everybody else starts recommending
Mom's
that you
asking.
buy Bitcoin, and we'll probably see that again.
Cory, do you offer interest rates? So the reason I ask is there's a major area, crypto savings, that I find just so impressive. Up to $50 billion is my estimate now in crypto savings, where people are earning 4 to 5 to 6 to up to 10% on stable coins. And it's just a giant sucking sound of money. It's a rule in the business that money always goes to it's the best treated. And it's just increasing. Are you involved in that? Swan involved in that? I don't know, where people can earn 7%, 5% on their Bitcoins?
Yeah, I mean, I think that if you're thinking of allocating toward crypto, you would want the one that's going up 200% per year instead of a stable coin that's giving you 7%. So
Well, okay, but even
that's
they're
what I
even
generally recommend.
they're making the interest on Bitcoins, for instance.
Oh, no, they're not. Nobody's
Okay.
making 7 or 8% on Bitcoin. Yeah, for anything over 1 Bitcoin, the best rate out there is like 2% pre-tax.
Okay, yeah.
And, in my view, I think a fair market rate for lending out your Bitcoin and not actually controlling it anymore should be more like 25 or 30%. So I think that risk is massively mispriced. So I would not recommend that anyone lend their Bitcoin to anyone else for the rates that are out there in the market at 2%.
Did you hear what was it Unchained Capital? Somebody wrote. I just interviewed Preston Pish the other day about this, and they said that they're going to be offering that without actually having to give up your keys. Did you read about that? Do you know anything about that? Can you comment on that?
Yeah, I mean, I'm an advisor and investor to Unchained Capital, and they've got a way that we think they can do it while you still sort of have control, and it's sort of in collaborative custody. My suspicion, and this is not anything that I know from talks with Joe and the team, because I haven't been involved there sort of on a daily basis for over a year, is I think it would probably involve an exchange, and it would probably, so there you'd cut it down to just a single counterparty. And then it would probably just be, the funding rates at a single exchange. Because that's way less risky. You don't have to worry about, the credit scoring of all the shorts and the market makers and the hedge funds that are essentially using your Bitcoin to trade and execute their strategies. And, you don't really have visibility into the cross collateralization of those different funds and what else. Maybe they're short corn and corn actually blows up and then they have to sell their Bitcoin and, they blow up the whole thing. Like, it's just such a black box.
Mike's like, why did I say corn?
Yeah, it's just, we always refer to Bitcoin as corn. In fact, the emoji that's usually used on social media for Bitcoin is often the corn.
So anyway. We're going to start with some questions from the audience. And the first question comes from Gary. Gary, you want to open up your video if you've got it and ask a question? Our audio is fine.
Unfortunately, this PC doesn't have a video attached to it. But there were 2 questions. One is, how much sense is there in owning a portfolio of cryptos as opposed to just holding Bitcoin itself?
I'd like to just address about that. One thing we did at Bloomberg is we teamed up with Galaxy and Novogratz and the Bloomberg Galaxy Index. And now the key thing right now is there's a few, Matt Hogan's team does that Bitwise, but here's the cool thing about an index that's done properly. It has a survival bias. So for instance, there's that risk. It's very minor that Bitcoin might be replaced by a new, better form, or that Ethereum might be replaced by, who knows, EOS or whatever, or move up the ladder. A typical index will have a survivor bias. It'll kick out the old ones and put the new ones in and do well in the long term. So if you're a long-term holder, and our index is designed, the largest part of it is really Bitcoin. I think the Bitwise index is much more Bitcoin. So that's a key thing to think about. Buy and hold like Swan is, and don't want to have to deal with trying to pick winners. I mean, some people are more into the trading. That's a cool thing about index. And the key thing I want to mention that cool index helps is 90%, in my experience coming from the trading pitches, the vast majority of people who trade will lose in the long term. It's just knowing when they stop. And an index helps alleviate that.
Yeah, the idea, I hadn't even thought of that, but that's, I mean, I'm just doing it individually on my own, but that makes perfect sense. I mean, it's in the same way that it makes sense to own the S&P 500 if you don't want to have single name risk. So,
Cory, what do you think of having a mixed basket of cryptocurrencies, Cory?
Well, it's interesting because, a lot of people, we grow up with our education about stock investing, right? And I got a finance MBA from University of Chicago and served FIG clients as a consultant, private equity and stuff like that. And, we always kind of learn that you want to diversify to improve your risk reward or improve the Sharpe ratio of your portfolio. And in the crypto space, if you add altcoins to your Bitcoin portfolio, you decrease your Sharpe ratio. You actually lower your risk reward. And when you also add in that you would have to be sort of actively tracking these things, that you would have to, you're not judging like how good their numbers are in their market. There's no free cash flows because they don't actually have businesses and they don't actually have adoption of anything to speak of. And so you're really just saying like, okay, well, how active is their Telegram group? how believable is their founder when he tries to fool people when he's on TV? Like, that's the kind of stuff that you're judging, is like, what will other people believe that other people will believe? And that's kind of the game outside of Bitcoin. They're all super high beta to Bitcoin. They're just like leverage bets on Bitcoin. They go down, if Bitcoin goes down 80%, they're going down 99.5%. Some of them do go up more than Bitcoin because they are like sort of law of small numbers, but a lot of them, the vast majority of them, just die out. So you hear a lot of people and you see people saying like, oh, well, this crypto is moon rocketing. Well, would you really have sold all of your other assets to be in that one thing? No, you'd be an idiot because you might have bet wrong. As an example, a lot of really smart hedge fund guys in the space realized in 2019 that some of these exchange tokens were probably going to do pretty well. And, so there's Binance, own BNB, there was FTT, which very few of them realized was going to be a big deal. That's Sam Bankman-Fried's token for FTX. Now they're going to be the Miami FTX arena for the Heat. But most of the fund managers went big on Leo, which hasn't done anything. It was the Bitfinex token. And that was the one they all said, well, that's the one, that's the one, that's the one. And so, were they going to take, half of their Bitcoin and split it up evenly across these three things? No, they kind of just like got it wrong. It's so much easier just to be in Bitcoin.
Do you guys, and anybody on the panel, do you know, has there ever been a time when Bitcoin was crashing and the other coins were going up?
There's one example of that to me that's profound, and that was 2018. The whole market's collapsing. There's only one thing that was increasing market cap, but that was Tether, the stable coin. I was in Hong Kong, 2018. This was right after the typhoon and a year before the riots. And I remember pointing this out to a group of people, and they really pushed back. Oh, Tether's a scam, it's a joke. And then some of the more astute Chinese-related people like, we love Tether because it helps us get away from the yuan. But that was the key thing that's really started making me realize something's going on in this space. So to me, to answer your question, Joel, that really matters. What I want to point out in here is, I've noticed is, Tether is the most widely traded cryptocurrency on the planet. Its volume is almost double that of Bitcoin on coinmarketcap.com, which is somewhat dicey, but it is an indication of volume. And the reason I point that out is because it's part of that massive infrastructure that's happening. And I want to make sure our audience is aware of this. Is not just Bitcoin. This is called the digitalization of money. This is as profound as when money went to paper, who knows, maybe 500 years ago or 400 years ago. And it's happening digitally, and the dollar is gaining dominance globally. So this is becoming part of a major cold war that's happening. As we've all heard about Chinese central bank digital currencies and how that's going to be so great. They are just trying to catch up. The China sees what's happening globally is, despite the fact that U.S. GDP is declining and China is advancing, the dollar is gaining dominance because no one wants to be part of that surveillance state. If you have a digital currency, you can track everything that's happening. So that's the key thing I want to leave on and point out to your point, Jay. It's part of what I see is this massive organic lift up in a market and something that's never happened before, an asset class. Bitcoin's the first, it's the most significant global digital reserve asset. And then there's this global digital reserve currency. It's the dollar. And to me, that's the key thing. That's the only thing I remember pointing out. And I'll end on this. It was April 2019. The reason I mention is that's when the New York Attorney General came down in Tether, hammered hard. And I was still bearish Bitcoin. And it was around $4,000 or $5,000. And as soon as it was within a week, Tether came right back. The market said, we don't care. It went right back to 1. Volume started increasing, assets under management started increasing. That's when I got bullish Bitcoin. That's when I realized this space has something going on that's much more significant than your average person, like Jay and Cory mentioned. You learn it in business school. I went to your rival business school, DePaul. You guys are the smart guys at UFC.
CalStat, it's good school.
There you go, the Blue Demons. But so I'll end on that, Jay. And I'm glad you asked, because that has been, to me, that's people don't get it in the space. It's just not Bitcoin. It's not all these 9,000.
I just follow up on one thing before we go to Albert,
Yeah,
or Alberto, or was it Gary? I'm not sure who's next. It's only like 3% of the market value of Bitcoin. So if this was a stock, as an example, and you have a leader and a market leader like Tesla, and then you have a new company coming in, and say you have $1 trillion company, Tesla, just say, and then there's a company that's at 40 billion, like, would you really say that you should be in that too? Or, you know what I mean? It just seems to me that that's a losing bet. It's a risk. And I always go back to this too, Mike. I always go back to, what is the risk? Why not be you're supposed to like press on your winners, right? This is the winner, press on the winner. So why mess around with all these guys that clearly are not even close to remotely close to winning?
I don't disagree. Here's the key thing. The way I look at the whole macro market, it's a classic economics model. When there's too much supply and ease of entry, prices will not go up much. There's 9,000 cryptos on CoinMarketCap.com. Last year, there was maybe 4,000. It's just too much supply, massive speculative excess. I remember in 2000, I made some decent money trading internet stocks. Half of them went under, and a few survived. Bitcoin is a survivor, probably will survive. There's going to be a flush at some point. The key thing I've been learning about cryptos is, let's use this example, is XRP. Yeah, we all know about Ripple. A lot of people hate Ripple, but what happened to it recently? It got knocked out of every index. New York AG came down. It went down to 20 cents. And where is it right now? 1.7 cents. It's it's almost $2. I look at that as the market's telling me something organic here. Is there's bids below this market. Until that ends, I don't know, but I still think Bitcoin's the best one. But I look at Ethereum, and it just keeps knocking the cover off the ball. And like you said, until it, at least still something fails, you're supposed to just ride that bull market. I just fully expect that when we do have a flush, Bitcoin's going to win, and then half of these, part of these 9,000 will just look like they were just kind of. They're speculative digital assets.
Yeah, I think Ethereum is still down about 80% in Bitcoin terms from its all-time high.
It's all about the relativeness, right?
Yeah, if you're in this space, your base currency that you need to judge everything against is Bitcoin returns.
Denominate it. Yeah,
very true.
And I just want to push back just on one thing, just for a moment, and then we'll move on to Alberto. Thanks for the question, Gary. And that's your comments on the China's CBDC and the fact that nobody wants to be part of a surveillance state. And I push back on two things. One, I don't want to be part of a surveillance state, and you probably don't, but I don't think the rest of the world largely really cares yet. They're all on Facebook, and that's a surveillance state. And B, if you're moving money around the SWIFT, do you think that the government is looking at you, and the U.S. government is just another surveillance state watching where everybody sends their money?
So, Lou, good points. I don't disagree. I just want to point out the key thing that hits the press is how U.S. is losing dollar dominance in this world that's going digital, and China is taking over. The facts are it's the exact opposite. In a world that's organically, the world is embracing the dollar digitally. They'd rather transact in the dollar than anything else digitally.
Okay. That's fair. And so thanks, and thanks again, Gary, for the question. Next we'll go to
have one more. If
that's okay. Hey, Gary, I appreciate it, but we're trying to let some other folks get some questions. I'll put you back in line.
Okay.
We will get to it. Thanks, Alberto.
Yeah, thanks. Thanks everyone here on the panel. Question for Mike. What are your thoughts about gold-backed tokens? So for examples like the Pax Gold, Tethered Gold, and do you think it's going to overtake like the market cap of a gold ETF? And also businesses, what are your thoughts about them using it as a digital sales avenue?
The fact of gold is, in an ETF standpoint, Lou pointed out earlier, there's outflows out of gold, the old analog global digital reserve asset, into this new digital reserve asset called Bitcoin, in a world going that way. I don't see why that should stop. I think it should accelerate. So any token that tracks gold is probably going to underperform Bitcoin unless gold starts outperforming. Now, gold's up a little bit today because interest rates are down and crude oil's peaked. We don't have to dig into that. But hey, I think it's a business, people, and that to me is what's happening in space. It's so easy to follow an asset via a token, but the underlying thing that token's tracking is analog reserve asset world going digital, and that's why I have to go towards Bitcoin. And that's one thing, like Lou pointed out earlier, the largest ETF on the planet in June, in terms of commodities, is probably going to be GBTC. It'll probably surpass GLD unless something goes wrong.
Thanks.
Okay, terrific. Our next question will come from Darian Cohen. Darian, unmute your mic. Going once. Darian, going twice. Okay, then we will move on. I'll ask the question because I thought it was an interesting one, and that's Mike, or I guess, yeah. Please explain how Bitcoin is different than gold, other than being more liquid and easily transferred. as long as there are taxes in this country, they will be settled up in USD. Nothing is going to replace that, and therefore the need to have dollars. Therefore we still need to have dollars as well.
I love that question, and I was asked live on TV the other day. People say, "Well, I can't fund my taxes with it," but you pay your taxes in dollar. Do you pay taxes in gold? No, you sell the gold, monetize it, and pay your taxes. And that's what I was trying to point out earlier. The dollar is still the world's reserve currency. It's gaining dominance there. It's the best way to transact anything, but you don't want to hold it too much because it's naked, like Michael Slayer says. It's a melting ice cube, but there's no better way to transact. It's just adopted. And the way I like it's not going away, and that's why I like to compare the difference with Bitcoin and gold. The key thing is, first of all, the world's going digital. Bitcoin's not widely adopted, and it's digital reserve asset, number one. And then you look at supply. Bitcoin supply is about 2%. It's increasing 900 coins a day of total. By 2024, it's going to 1%. And then who knows, it's going to be maybe 0.5% by 2028. That's by code, supposedly guaranteed. If prices go up, gold supply will come on. I mean, it's virtually guaranteed. In history of gold, the average supply increases around 2%, but if the price goes up, supply is coming on. There's a lot more incentive to find more gold, to mine it. It's just, it's a reserve. It's harder to find than silver or copper or crude oil, and that's the big difference. The key thing I want to leave you with is there is many entities on this planet that have held gold forever. I've always been a bit of a gold bug. I always thought it was great in an investment portfolio, and now everybody who holds gold knows that some of that gold is not being allocated to Bitcoin. They may be losing out. That's a bit of a wave, and I potentially think it could, and actually it's probably a small wave right now, but it could turn into a tsunami if Bitcoin just keeps doing what it's saying. So here, I'll leave you with one thing. Bitcoin standard, Saifedean Olmos, he suggests, he predicted this, that at some point, central banks who hold a lot of gold will start buying Bitcoin. When I first read his book, I completely disagreed. And now every day that goes by, I'm like, man, this guy's got it right. How could they not buy it if it continues to simply how could they not allocate some of that gold towards Bitcoin, unless it fails, which is kind of past that point of failure.
I like what Scaramucci says. It's a scarcity play, right? There's 48 million millionaires on the planet. And there's 21 million Bitcoins. Get your Bitcoins, guys, because you're not going to be able to get a full Bitcoin in the future. I tell you that.
So the key point, Jay, the millionaire in Mexico, millionaires in Mexico. I look at the value of the peso versus the dollar has dropped 50% in the last 10 years. So imagine that. It's like, you have to diversify into something that's going to increase in value and help preserve the wealth you have in this paper currency. You kind of have to own some Bitcoin in addition to all your other assets.
I'll give I ran these numbers a couple of years ago, and I totally lost the spreadsheet, but I still believe that my math at the time was pretty good. And I came up with around like 700 to 800,000 people had at least one Bitcoin, and that number would never go up. It only decreases over time as more people pile in and split the Bitcoins up. So yeah, some people are accumulating and getting over the hump, but the vast majority, it's actually people jumping in and taking it and distributing it more widely. So that's just a crazy number when you think about it. Yeah. What is that? That's 1 out of every 10,000 people on the planet. You're in the 99.99 percentile if you have a Bitcoin.
Well, that's a key thing too, is we're all dealing the global reserve currency, the dollar, and have as Dennis Gartman says, 11 aircraft carrier battle groups supporting that dollar. That's never existed in mankind. But think of the rest of the world that don't have. I mean, I have my colleague in back from me who's from Venezuela. He likes Zimbabwe. I'm sorry. He likes Bitcoin. I wonder why.
I bet.
I think, it's a really important point, because you're going to see, and we've already seen, especially mainstream press and, people talking about, is Bitcoin bad for America because, we need this dollar hegemony to be able to sustain ourselves. And we have to just remember that there are negatives to having the reserve currency, the Triffin dilemma, the rotting out of the manufacturing core, social problems. I forget, look it up, but it's something that economists always talk about. But it basically explains why, you essentially end up with, if you're the global reserve currency, you export dollars, that's your main thing. And then you import goods and services that your population is no longer competitive producing those goods and services. And so essentially you just kind of rot out your core and you end up with social problems and kind of a path to tyranny. And the other thing to remember is, we're right now 7 years away from being the longest running fiat currency system in history. The longest running fiat system that's ever made it was like 57 years. We're on year 50 since coming off the gold standard completely and going on the petrodollar in 71. So, you know, we'll see. I actually think the dollar will make it to 2028 in its current form, but we may get some really drastic changes, you know, as we seem like we're kind of in the end game with as much printing as we've been doing over the last year. And, you know, all this talk of MMT and CBDCs and all these other things, it's very possible that the dollar continues in name, but is some sort of much more centrally managed, sort of Fed controlled, get rid of the fake division between the Treasury and the Fed. And we'll see what happens with the dollar, but it certainly seems like it's got some problems.
That's a good lead into our next question from Avi Vogel. Avi?
Hey, thanks, Lou. Thanks, guys. Fascinating panel. Hope we can do this periodically so all of us can have access to your wisdom. Quick question about sovereign use of Bitcoin. On one hand, I get really energetic about seeing mainstream corporations go with Bitcoin, and anything that makes it more mainstream and closer to sovereign is strengthening the Bitcoin currency, but is also presenting a challenge and a big threat in Janet Yellen pulling a Roosevelt, like Roosevelt did with gold, forbidding personal retention of it and trading. So I want to ask you about what's the likelihood of sovereign fighting Bitcoin like India is trying to do right now? How successful will they be? What's the real risk to all of us from sovereign intervention?
I'd like to address it real quick. I think it's happening in China. Any country that has an issue to worry about makes sense. I mean, they banned mining. India's considering it right now, but you can't really ban it. You can try all you want. And maybe countries like North Korea and China, you can. But I think strong countries, countries with solid open discourse, free markets, free capital, and the ability for analysts like me to say whatever we want, to criticize the government, criticize the system, to make it better, it'll do just fine. And that to me is what's happening. And I do expect that, to me, it's probably just a foregone conclusion that countries like China, who hate the dollar is their nemesis, and North Korea are hoarding Bitcoin. I mean, they have control over miners, they have control of everything. I found that from my colleagues in Hong Kong, they cannot say anything against the government anymore because they might end up in prison. That's a big difference from 2018. No matter it's Hong Kong, they're supposed to be free. So to me, that's the key thing that's happening is, in addition to gold, you can't just, all these countries who hate the dollar and holding gold are now allocating some to Bitcoin. They kind of have to. Why not? To me, it's just simple prudence. What if it continues to do what it's been doing? So to me, as far as this sovereign thing, as far as the key thing is the US, the key thing to remember, and as Cory mentioned before, digitalization of money is enhancing the dominance of the dollar globally. Why? Because it's free. There's open discourse. There's arguments. We can say what we want. And there's analysts that criticize everything. That makes the system better. I mean, I can rip into a company's earnings right away and be able to tell you if they're doing something wrong. You can't do that in China. Imagine what happens if you try. Just criticize the government for not properly handling the pandemic. So I'm not worried about it. To me, it's the U.S. government's smart enough to just let this happen, like we did the internet, and move forward. And to me, this is part of the Cold War we're going to hear in the future. Is digitalization money is part of the next Cold War, and the closed market surveillance states are clearly going to lose. Any country that's not tolerant and it's not open and free is losing, and that's China.
Mike, did you hear recently that Ray Dalio made a comment about the government most likely going to ban Bitcoin at some point?
I so enjoyed it. I work 2 miles from his office, and I've never seen Ray, but I drive by his office every day on the way train in Bridgewater. And last year I put a comment on that. Okay, let's look at the probability of banning Bitcoin. If you're going to do that, it's called a two-factor model. Very simple. One side could be one probability, they ban it. And the other side is central banks could allocate it. To me, what's happening, it's almost impossible to ban now. It's open source software. It's like free speech, and it's the world's largest network. And by the way, not only that, the U.S. has embraced it. There's CME futures trade Bitcoin. So it's almost impossible. But key thing to remember, Jay, is it gets great headlines. Media gets the hits. I mean, I'm in that business. If I don't get hits, it gets the hits. But the fact is, the probabilities are tilting much lower away from banning and much higher towards central banks adopting. That's what I responded. I so enjoyed that comment. I think I need to do it again. Okay, if you think that's a probability, then you have to understand the other side of the coin. It's more likely to be adopted by central banks.
So do you think Ray Dalio said that to get some headlines?
Yeah, well,
you heard it here first, guys. I'm kidding.
Yeah.
How successful is India with its banning effort?
These efforts are never successful for long because the people just end run around it. And basically what happens is the price ends up with a premium in the local market to the global price, which makes the entrepreneurs rich, which makes them able to bribe local officials, which makes them able to make it legal again. So all 3 bans in China thus far have, failed, and they've basically rolled it back. Obviously, there's still plenty of Chinese miners going. The whole idea that the CCP actually has like command and control all the way down the line to the local level is a complete fallacy. And it's actually one that they kind of promote. They like the rest of the world to believe that they have that kind of control, but they actually don't. And so it's very easy to just bribe some, low and mid-level local officials in your province or whatever, and cut them in on the profits. And they're never going to do the inspections, and you can have some hydropower and mine your Bitcoin.
Perfect.
So it's just not an issue. The only government that actually matters at all, and it's because of, the 11 aircraft carrier divisions and the reserve currency and, just the military might and intelligence and everything. The only government that ever mattered versus Bitcoin, if you were going to say that they were opposing forces, was the US. But Bitcoin is so in line with the founding ideals of the United States.
True.
Almost everything that you see written about and talked about in the Bitcoin space just sounds like you're reading from the Federalist Papers and the Constitution and the Declaration of Independence. It's these guys over and over. There's hundreds of instances of these guys saying that like we're screwed if we ever let the banks print money. Like it, you need to keep that out of the hands of the banks. And so this sort of experiment that we've had since 1913 with the creation of the Fed and all of that, I think this will just be getting back to the foundation of America and what we're all about. And it's having state-free money.
I've heard you say on Clubhouse too, that Bitcoin is code is speech. So it's protected under our free speech, right?
That's already been proven. They won that course in the Supreme Court in 2001. So you'd have to have a Supreme Court precedent reversed from a case in 2001 if you wanted to do something to ban Bitcoin. It's going to be very
what's
difficult.
the risk to Bitcoin if they can't ban it?
Well, that's the key thing. It's not so much they can't ban it; it creates headlines. It's the press trying to get the hits. And I always okay, let's talk about. It's more likely that all 3 of us are going to, or 5 of us are going to get hit by a bus on the way home together. It's just such a low probability thing. It's such an extreme thing. So let's look at. People use the example of gold. What gold was. Not so much banned, but it was hoarded by the U.S. government during the depths of the Depression. Imagine if the stock market was down 90% and we had 30% unemployment. Well, the government will do anything to survive then and to make people live. We're nowhere near that. I mean, so to me, this is just this is part of the advancement of humanity. Cory has pointed out, and I'll end on what I had the honor of interviewing Kathy Wood in the Bloomberg Crypto Summit. Her quote was, "No legislator wants to be known as the person who ends the next big thing."
That's a good point.
That's got to be true.
Thanks very much.
So thanks, Avi. Our next question comes from Chase Lopez. Chase.
Hey, how's everybody going? Glad to be here. So my question is regarding self-custody. I just wanted to get the panel's thoughts regarding individuals taking self-custody of their Bitcoin and how this gap of education is going to be bridged. And really, how long is this going to be a self-taught endeavor? Because I know right now it's just really, you've got to go seek out that knowledge. You got to buy the devices, test it out in the parking lot, make a few transactions. And when is this going to happen to where these educational institutions are going to start, adopting this and being like, okay, maybe this is something we should actually start teaching, at a lower level education and on to, colleges where you start to get degrees in it.
I think Cory would go for that one.
Yeah, happy to. I mean, so the education is there. It is very good. It's not DIY anymore. So I think there's probably been a probably a 10 to 20x in the amount of education about Bitcoin, including everything around self-sovereignty and storage and things like that in the last 2 years. It's just been an absolute explosion in the quality and the quantity. So, you know, you can go to lop.net. You can go to swanbitcoin.com/wallets, where we teach people about self-custody. We allow them to custody with us for free or withdraw it for free automatically to their own self-custody or to anywhere else they want to send their Bitcoin. It's just becoming less and less of an issue. You also have like a rising industry of collaborative custody. You know, we talked about Unchained Capital briefly. There's Casa. There are other more open source versions of that. You know, Unchained created Caravan. You've got Lily Wallet and a bunch of other multi-sig providers out there, making it so that, you know, you could have 2 keys. So in case you lose one, at least there's somebody else that has another key, for instance, or you could do a 3 of 5 or something like that. So I don't think it's quite you've just got to buy the devices and experiment in a parking lot with a friend, although you should do that too. I highly recommend it. You can certainly get really, really good education about self-custody now.
Yeah, for sure. And I think that maybe I was a little bit misunderstood. I just use that more of like a reference point, you know, testing out the parking lot. Like I understand, like you can download Electrum and Wasabi and hook up cold cards and, you know, do party sign Bitcoin transactions, like all that. And I think, you know, getting deep down that rabbit hole is just a little bit hard for some people. And just like, so will that education ever transfer over to like maybe like a structured course that, you know, elementary schools or something can actually, you know, start at like block 1 and, you know, move on from there?
I mean, my suspicion is that most of it ends up getting abstracted away, just like we don't have elementary school classes about internet protocol or HTTP or FTP or SMTP or
money,
email or any of these things. It just gets abstracted away by good UX design and good technology. So there's just a lot of layers of code that need to be built on top of this until the wallet that you use is just as easy as using, you know, Cash App or Venmo or something like that, but it's doing all those kinds of things in the background and delivering a great experience for you. And some people will go deep down the rabbit hole and will understand the code that underpins the apps that they use. And other people will just trust people like you because you'll blog about it and you'll do the reviews and they'll kind of trust you just like they trust a movie reviewer. And they'll be like, okay, well, I'm going to use that app because Chase gave it the stamp of approval. We don't all need to know everything.
For sure. Yeah, that would be my questions. Thank you all for your time.
Thank you.
Thanks a lot for the question, Chase. And we'll end. This was obviously call was about Bitcoin, and I think one of the first questions that we said was going to be asked was how high can it go? I'll ask a slightly different question, and I'll let you all put your time frame on it. You know, give it if you'd like to. Please give us a price prediction on Bitcoin, and you can pick whatever time frames you'd like.
So I guess I'll start. I'm looking for the next key level is 100,000. I think it's going to hit 6 figures. And what I'm seeing is an orderly adjustment to higher prices. And that's just kind of a normal year and a halving. And like I said, the foundation is so sound. It's a perfect storm for higher prices. The key risk, I think, on a major risk-off event is I sense people would love to be buying around 50. And I don't even know if it's going to be able to get below 60. So initial target now for this year is around 100 grand. And the next key thing I think we're going to hear is Bitcoin market cap surpassing Amazon, which would be, I think, about 80, which is $1.5 trillion. Pass it back.
Yeah. Cory?
Yeah, it's tough. I mean, I'm not going to change the same thing I've been saying since I think late 2018, which is I think this cycle goes to somewhere between 150 and 300. I think it's going to get really aggressive at some point, like it usually does. And, you know, I've got a lot of friends in the space that think at some point we get out of these cycles a bit and there's kind of a super cycle is kind of the popular term where we no longer see drops of like 80% and you might see a pullback of say 40%. But then it just keeps going and goes to 1 million or something like that. I'm not willing to bet on that one at all until I see it. I think there's a really good chance that we're done with cycles in 2029, a pretty good chance we're done with cycles in 2025. I don't think we're anywhere close to ready. We have a handful of big corporations that have put a little bit of their balance sheet into Bitcoin. I actually think that there's a very good chance that other institutions that get in at like 50, 60, 75, if they see the thing run up to 200 or 300 and then it starts to pull back and they don't actually have a deep understanding, a deep foundational knowledge of Bitcoin, they're going to get nervous about the questions from their investment committee that also hasn't read Inventing Bitcoin or the Bitcoin Standard or listened to Jimmy Song podcasts, they're just not going to get there this cycle, and they're going to freak out, and they're going to take their 3x, 2x, or try to get their capital back, and it'll actually have like another spiraling selling thing. And that's why I just say, like, accumulate all the time, over time, treat it as a savings technology. It's a 10-year hold or 10-year hodl at least. By the time you hold it for 4 or 5 years, you're going to want it to give it to your grandkids anyway. So, you hold this thing for 5 years, you're going to be trying to figure out how to hold it for 100. So that's my take. Just always be buying a little bit, whatever you can afford not to sell, not to have to sell in the future. So you can ride this thing out and just be thinking about your Bitcoin balance and making sure that that's always growing.
Okay, thanks, Cory. Jay, you want to make a prediction?
Price prediction? We don't predict prices, Lou. No. Stock the flow, right? If you go to Plan B, stock the flow. I think it's what does he say? It's like 100,000 for the cycle, somewhere in there.
100
right?
grand.
Yeah. Stick with that. I mean, it's probably 100. It could pop up a little bit higher. I think there's risk to the upside, and that's why I asked Cory, because he has an inside view on the corporate American institutional money coming in over at Swan, and probably knows it. So I don't know if there's a bunch of money that's coming in from institutional and it starts to come in aggressively towards the back half of the year, because they had to go through the investment committee and the board approvals and all the things they did, and it starts to really come in. There could be a lot of competition and risk to the upside. So you could see this thing pop to 300, 400,000 in this cycle. And then to Cory's point, as it starts to decline, you could see a major decline because they're going to have weak hands on the way back down again because they don't have conviction. But I think it's a 5 and then a 10-year hold. And I wouldn't be so worried about what it's doing in the next year.
Just to put some real quick, just like math and a visual on this, and I can't remember if it was Stevens or Scaramucci or Saylor, but anyway, we were talking about, could the government ban Bitcoin? Really, the US is the only one that matters. And for me, beginning of 2020, for me, that was like a mid-single digits proposition still. After Saylor and institutions and Fidelity and BlackRock and, Paul Tudor Jones and everything that we've seen over the last year, to me, it's sub 1% and probably trending down toward, 0.1% or somewhere where I think Mike probably has it in my head. And what this is doing is, if you think of a bell curve of the potential outcomes for Bitcoin market cap, we've chopped off the left end of the distribution. And that was the visual. I'm going to say it was probably Ross that said that, that said, we've literally just chopped off the left end of the distribution. And so now everyone, if you didn't take the number that you thought was what Bitcoin is worth at the beginning of 2020 and all of your forecasts for the next year, the next 5 years, the next 10 years, and you didn't at least double or triple that over the course of the last year, you weren't really paying attention and like adjusting your mental models.
But I love that also, that narrative in human nature. The best way to make people want something is to ban it and tell them they can't have it.
I like
your parents when you're a kid.
I get the chance to end it just with my prediction. And as Jay said, I'm not really thinking about the next week, month, or year. I'm kind of looking out 10 years. And I think that looking at it as a store of value, that it's a dramatically better store of value. And when something dramatically better comes around, it usually dramatically grows the market. So just in round figures, if gold is a $10 trillion market today, I think in 10 years, it can be a $40 trillion market. And I think Bitcoin can get half of that, and that would be $1 million in 10 years. So
okay. I would actually take an even money bet that Bitcoin will hit over $5 million a coin by 2030.
So the key question we have to ask ourselves is what's going to trip this up? Because we all agree on that. What's going to that's the question I ask. What can or what might trip this up? To me, that's the major issue. Otherwise, it should just continue what it's doing.
The only thing that could trip it up, in my opinion, which no one said, that's why I asked it several times, and I think it's probably impossible after 12 years, is if somebody breaches the code in some way. And
that's gonna happen.
And they would fork it, we would fix it, we'd patch it, and there'd be a major disruption to confidence in this, and it would just come back again. It would have to be technical. Outside of that, there's no stopping. It's a runaway train.
Yeah. A runaway train. So with that, I'd like to thank everybody, Mike, Jay.
Thank you. It was fun.
Cory, it was a great call. Thanks everybody dialed in. We'll see you later.
All right. Cheers.
Thanks all.
Take care, guys.